you're here today with Todd Jordan, who is Managing Director and CFO of Hedgeye Risk Management. And Todd's going to talk us a little bit to us today about the investment environment in the gaming industry and perhaps some of his favorite names. And Todd, first of all, we've known each other for many, many years, and you don't have any gray hair.
Well, I honestly, I don't color, but if I return to the side, which I will not do, you will see my sideburns are pretty gray. So we'll leave it at that.
Okay, you're still a young guy by my standards. Todd, thanks for taking the time with us today.
Yeah, it's great to be here, Frank. Thanks for inviting me. I appreciate it.
I guess the first question is to let folks know about Hedgeye and a little bit about yourself.
Yeah, sure. So Hedgeye Risk Management, we're a registered investment advisor in the state of Connecticut. We provide independent research to hedge funds, mutual funds, long onlys. We also have a business where we sell our product to the mass market, so individual investors, as well as other registered investment advisors. So we're not a broker dealer. We don't do any investment banking. There is no conflicts at ever. We're a pure independent research shop. We started the firm in 2008. I was one of the original guys, along with Keith McCullough, who's our founder and CEO at this point. And we had a great start. We came out pretty negative on the market, and that really helped our reputation. And from there on out, it's been a great ramp up. So we're pretty happy where we stand. As you pointed out, Frank, yeah, I've been around for quite some time. You and I met. I think you were doing your primary research on the gaming industry, and quite successful. And I knew we had to talk because you were posting some very interesting things at the time, and a lot of you guys had some good research. So that was a fun time in the gaming sector. So I've been covering gaming for a very long time, both on the sell side and the buy side. Most recently at Jefferies Asset Management on their platform. I was running a consumer long short on that platform. And prior to that, I was at a couple hedge funds running a consumer book. And prior to that, I was on the sell side, but always covering gaming, always doing consumer. So gaming has been a very big part of my career, and it's been fun, really fun.
Great. And all these years, you still find gaming attractive. What is the attraction to and the value to investors in the gaming space?
Yeah, I mean, look, first of all, it's just fun. It's just a great sector. I mean, I get to go to, well, pre-COVID, hopefully I'll get back there, but Vegas, Macau, all over Asia, there's gambling. It's just a really fun sector to follow, but it's also, as you know, Frank, pretty dynamic. I mean, a lot's going on. There's always change in the industry, which makes it really, really interesting. There's always something to talk about, whether it's this legislature doing something, monthly gaming revenues that are coming out, all kinds of transactions, M&A, and what I really love is the amount of data that comes out of the space, because it is pretty heavily regulated. So we do get monthly revenue reports, but there's also a lot of opportunities to accumulate primary data. So we're pretty data dependent in our firm, and especially my group, where I run the leisure sector, which we do. Gaming is a part of, and we like to accumulate and analyze data. And we find the more we can accumulate primary and proprietary data, the better edge we'll have. So I think that's very available in this space, and we've been pretty successful at utilizing that.
Okay, great. You've mentioned there have been a lot of changes, and there have been some really big, almost thematic changes in recent years. One of them is the rise of the gaming REITs that have become even more active in the last year or two. Another is, which affects all public companies today, public investors, and that is the rise of the SPACs.
Sure.
And we know that in addition to the companies that have gone public or are going public through SPACs, that we have 2 or 3 SPACs out there that have announced, we are looking for gaming companies. And then you have everybody's favorite topic, which is the proliferation of online sports betting and iGaming. Any thoughts on any one or all of those trends?
Yeah, well, the perfect example of how dynamic the industry is. A lot of those trends or phenomenons are, fairly new, fairly recent. So it's been really exciting. I mean, I have opinions on all of them. We'll start with the biggest and most important, which is online sports betting and online gaming. clearly huge for the industry, as you can see by the stock valuations. It's promising, and it's a great shot in the arm for these companies, and we're really bullish on the long term. We just have some issues, generally speaking. I should say I have issues, and that's, the valuations are definitely high, and my investment style is not necessarily to focus on valuation. But if I have valuation with a catalyst, then that really works for me, especially if I'm going against the grain or going against consensus. And I feel like I'm there on, and I may be a little bit early, but I'm there on the sports betting. And my issue is that, well, there's two issues. One would be just the road to profitability. Frank, I think so many companies exist. Their whole existence is based on capitalizing on online sports betting and iGaming. So they will do whatever they can. They will spend whatever they can to acquire customers and market, to be one of these survivors at the end of the day that have that critical mass that can actually make this business profitable. And it will be profitable for a handful of companies. The other issue I have is more just on the timing. I look at the fourth quarter, and the numbers were spectacular, right? At Jersey, Pennsylvania, and the new states. The issue, though, is we had a very unique, period of time, right? So first of all, just seasonality. If you go back and look at all the Nevada numbers, fourth quarter is by far the biggest quarter for sports betting. You can see it. It's football. It's all about football, right? And first quarter is the second best because you still have some football. You have the Super Bowl, and you have March Madness, and then it really trails off. So that's one issue. So I think the seasonality alone, you're going to see probably less growth, at least decelerating growth. And then the other issue in the fourth quarter was you had a very concentrated sports schedule. So everything was there. It wasn't just football, it was basketball, it was baseball. Every sport was going on. There were so many things to bet on, and people were stuck at home because of COVID. So it was just interesting to see so many analysts raise their TAMs based upon fourth quarter numbers, right? So it's going to be fascinating to see what happens. We're almost past March Madness, at least the big part of betting for March Madness. Then we move into April, and things should really slow down. So it'll be interesting to see what that does to sentiment, because you do have valuations that are very, very high. It's very difficult to get to those. Now, I don't want to say that things can't get more expensive. A lot of people thought DraftKings, for instance, was too expensive 30% ago, and look what's happened. I mean, expensive stocks can get more expensive, cheap stocks can get cheaper. That's where we're always focused on the catalyst. And for me, the catalysts seem to be lining up a little bit negative. I'd love to see FanDuel float in the U.S. I think that would be fantastic, because that would really help out Flutter stock, even though stock has done well, because I think there's a lot of value in FanDuel, probably similar to what DraftKings trades. And it was actually beneficial to Boyd Gaming too, which owns 5% of FanDuel. I think that would help that stock. But a lot of interesting stuff going on. iGaming is actually maybe a little bit more interesting in terms of being positive for us, just over the near term, not the long term, but the near term, just because it's more profitable. Many people are making it. Many companies are actually making money on iGaming right now, and I think it's maybe a little bit undervalued. We're certainly relative to online sports betting, which seems to capture all of the attention from investors. So that's really our view on sports betting right now. On the SPACs, look, I think that the SPACs are fantastic. I mean, the more capital that companies have access to, the more creative and innovative and job creating they can be. So I'm a big fan of SPACs. Now, a lot of them will fail. There's no question about that. But a few will do extremely well and will be home runs. And I'm a big fan of Jason Eilers, and Jason's got a SPAC, and it's been interesting to follow that. And that was one we told investors, look, if you're going to bet on SPAC, you got to make sure you got the right management team. And I think Jason's very solid, and they've got a real chance of doing well with that SPAC. But a lot will fail, so you got to be very, very careful. And then on the REITs, look, I mean, REITs create value because of the tax advantages. And it's interesting that it took so long. I mean, I remember, Frank, I don't know if you remember, Station Casinos actually looking at converting to a REIT maybe back in the early 2000s, and then nothing happened for 8 or 9 years until Penn and GLPI happened. But it creates value because of the tax advantages. But at the end of the day, what you end up seeing is the cash flows. Obviously, the cash flows to the REIT, because it's a REIT, trade at higher multiples. But the cash flows from the operating company, actually, the multiples go down. So it's not turned out not to be as big of a game changer as many people thought. And I think we're really dying down now on the REIT conversions. But the REITs themselves, I mean, look, GLPI and Vichy, it's a nice, stable cash flow stream. And now you're exposed to regional gaming, which, maybe a few years ago looked dicey, at least from the top line perspective, with the demographics and COVID basically changed the operating structure of those regional gaming. So you want to have exposure to those cash flows. So I think those REITs are actually quite interesting.
Yeah, it's kind of interesting also how some of the REITs, not the REITs, the regional casino operators who not long ago were sort of boring, ugly ducklings, just kind of plodding along, have all of a sudden become the exciting growth companies in this industry, thanks to partly the REITs being able to get that cash by selling off their properties, and to a great extent because they have the network of players that the sports betting operators can tap into.
Yeah, and that's why iGaming is so profitable, because they don't have to acquire customers per se. They've already got a database of customers. But I'll tell you a big trend that we've been fans of regional gaming for a while, with Penn and Boyd as our two favorites, and Boyd is now our favorite. But what I like is just the core brick and mortar business. Yeah, we know the sports betting angle, and that's helping the valuations, but it's a completely different business now, pre and post COVID, both on the top line and on the bottom line. Obviously, the cost structures are completely different. These companies are going back to the roots. They're becoming gambling companies again, which are nice margins. They're the days of the buffets and the free cars and all that other stuff are probably over, hopefully over. The companies swear up and down that that's over. So I think you've got sustained higher margins, and the street has margins coming down pretty dramatically. So I think there's upside just on that brick mortar cost structure. And we'll see it probably as soon as the first quarter for a lot of these guys. But the other issue is, I've had a problem with regional gaming just in terms of, they've done great even before COVID on reducing some of the marketing expenses. But the problem is always demographics, and that's been going on for years. And basically young people don't play slot machines. And that's changed with COVID to some extent. And the question I ask every time I get a management team on the phone is, are you still seeing the millennials and younger crowd coming back after, because they were introduced to the product when nothing else was open, right? The states needed money, so they let the casinos reopen, and everything else was closed. All other entertainment options were closed, and it was interesting to see that they got a younger demographic into their casinos. And you would think, well, maybe when everything else opens up again, that those millennials won't come back, but there has been quite high of a repeat visitation rate. So now you've got maybe a new core customer that's willing to come back, not all of them, but a lot of them. And then you'll have a lot of the older folks, that the traditional core customer with a lot of discretionary money, who are rated in the database and spend a lot of money in the casino. Maybe they've been staying away because of COVID, and now they're getting vaccinated. And we've tracked all the regional gaming states and the vaccination rates, and it's actually pretty good for relative to the rest of the country in these regional gaming states. So you've got a double whammy, if you will, to the top line, which we haven't seen in a long time, right? And as you pointed out, it's interesting that they are growth companies, and that's just the brick and mortar business, not even including iGaming and sports betting.
And we'll get to this in a minute as well on your favorite picks. But one of the things you said a few minutes ago, Todd, I thought was an interesting phrase, talking about the online sports betting operators, that some of them, a few of them, I don't remember the exact words you used, will be profitable. I assume you see a winnowing out, a consolidation of that space over the next however many years.
Yeah. So I think it's important to have a sports brand, not for iGaming so much. I think a lot of companies will be successful in iGaming. But I think there's only going to be a few winners. They'll have to have that critical mass, national TV advertising, things of that nature. And the leaders to me are pretty clear. It's DraftKings, it's FanDuel, and it's also probably Penn over the long term, because they have that Barstool sports brand, which is extremely popular with millennials, and millennials do a lot of sports betting. And the customer acquisition costs for Barstool and Penn are going to be a lot lower, just because they have a database. Just like the DraftKings and FanDuel, they had the fantasy players, which was a nice transition over to online sports betting. So I think it's going to be very difficult to supplant those guys. In the meantime, the rest of the companies are going to, because they recognize that they need critical mass, so they will spend and spend and spend. And the shareholder bases of DraftKings and Flutter are very accustomed to this business model. They expect DraftKings and FanDuel to spend money. They don't need them to be profitable right away. So you have different expectations than maybe say at MGM, where shareholders are used to a little bit of cash flow. Now, the market shares have been interesting. BetMGM has done very well in the markets they've been in. But what will happen when you have more entrants into these markets as Penn gets up and rolling with Barstool is, you'll see that spending, and there'll be a lot of free play, giveaways, all kinds of things. And it'll be very easy for players to switch from where they are, and they've already benefited from the free play, to the next site that comes up, and they'll transition over there. And then you'll notice over time, when all the free play is done and these companies are running on, just go forward operating models, you'll see how important the brand and the technology is and who's the winners and losers. So there is a first mover advantage, but I think it's very easy to replicate that very quickly, depending on the effort and the marketing spend. But then it'll stabilize, and you'll see the real winners and losers. So it's going to be a pretty volatile year, both in terms of profitability, but also in terms of market shares.
Okay, the fun part. What are two or three of your favorite names?
Yeah, sure. You look across the space, and I do cover leisure broadly, so hotels and OTAs and also the cruise lines. But I'll stick to gaming for this conversation, and all my stocks are up on a rope, right? So it's very difficult to find pockets of value, and I think Macau is one of the few areas where we see that value, and we like LVS quite a bit at this point, and I think just the general reopening trade, I think, is not happened to the extent for Macau as it has for other companies, domestic companies. So I think that's going to be a big catalyst when you start to see the real acceleration of GGR, and I think that's coming pretty quickly, actually. But post reopening, LVS is very well positioned. I don't think people really understand the extent of the projects that they've invested in, and one I would point out is the Londoner, which is the conversion of the crappy Sands Cotai Central, which actually the rooms were fantastic, but the product itself didn't offer anything differentiated, right? So if you actually track EBITDA per room or EBITDA per square foot, which is actually more important than the number of rooms, is the square footage of the rooms, you can see the properties generally go up on the same line. They're right there. The more rooms you have, the more EBITDA you have. The big one exception is Sands Cotai Central, which is way down here on the list, like $1 billion of EBITDA below the line, or $800 million of EBITDA. Can't remember the exact number. So just getting halfway to that line gives you this, 20% return, more than 20% return on investment. So I think they're going to be a big market share winner. We're already hearing the traffic flow is pretty good at that property. So I think LVS is a post-COVID, post-reopening market share winner in a segment that I like. So I'd put LVS up there. I also still like Boyd Gaming, for the reasons I said. I think we're early on in a positive earnings revision cycle with margins, but also the top line, which I don't think is fully appreciated by investors right now. I think investors think generally margins are going to abate, still higher, but maybe I don't think they're high enough from our expectations. And also the top line, I think, is just not understood at all. So I think there is another top line catalyst coming. And, I'm a firm believer in pent-up leisure demand. I know it's not an original thought, but I don't think people are bullish enough on leisure spend. So I think that's really going to help the regional gamers as well. And then finally, I'd say DraftKings, is probably a stock we're not a fan of at this point. I don't have any real issues necessarily with the company or the brand or the long term. I just think that they have the most to lose. If I'm right on the catalyst sort of laying out negative, sequentially, that would be, decelerating growth and maybe even decelerating absolute levels of handle as we move into the seasonally slower period with more competing options for entertainment and a more normalized sports schedule that we didn't have in the fourth quarter.
Las Vegas Sands certainly is a EBITDA generator, and they're going to be a backup over $5 billion or whatever that figure is. How do you value the political risk in terms of the Chinese national government and any tensions, conflicts it might have with the United States, and whether that might play out in terms of the effect of American companies? We certainly have concession renewals as one example.
Yeah, look, I mean, Frank, the risk isn't zero. I get that. But my view on China is that they're very long-term looking. And I think for them to single out American companies for punishment would be very detrimental to future foreign investment. and I don't think they're willing to do something like that. And I think Biden's election, he's much more pro-China, so I think that the risk of more trade wars is so much lower. So I think that the concession risk is pretty small, but it's not zero. My best guess is that it gets extended. So we're going to be they're going to utilize the automatic 1-year extension, maybe twice. So we're still probably a few years before we see a real decision. But anything can happen. We talked to a lot of people in Macau about this issue, and the reality is nobody really knows for sure. It's only speculation at this point.
Okay, great. Bill, this has been a great discussion, Todd. Thank you. Any other thoughts or trends within gaming industry that investors should be aware of?
Yeah, I spoke about the regional game. I think that's a really big one. I'd also point out that we have a very good macro team at Hedgeye, and we always highlight how our stocks fit into their framework, and our guys have been incredible in calling this up move. Basically, it's a quad 2 environment, which means growth and accelerating, inflation accelerating, which typically is very good for the stocks in my universe. Unfortunately, they're projecting that maybe at some point in the second half we get into a growth slowing, which would be called quad 4. Growth slowing and more deflationary environment, which is typically bad for a lot of our stocks. So it's one thing that, it's just something to keep in mind as we move forward. There might be some serious macro headwinds, and you could have the greatest stock call in the world, but if the macro is not working for you in terms of sentiment, then, none of these stocks are going to work. So that's something to keep in mind. Now, specific to gaming, I think the Macau recovery is going to be very interesting because a lot of people are worried about the VIP, the junket business going away, but the profitability of that business is so low, and we have to keep in mind that it's only going to take about 20% of VIP players, even if it goes away, VIP players coming back through the mass channel to really offset the loss of the junket business completely. So I'm not worried about the VIP business at all. And in fact, with my LVS call, they get like 3 or 4% of their profits in Macau out of the junket sector. So it's really not an issue for them. So I'm just not as worried. I think that that trend of just higher growth in the mass business, better mix is going to be good for these companies over time.
Okay, Todd, great. Really appreciate your time and your insights.
Yeah, Frank, thanks for having me on. I really appreciate it. Take care.